Video going to be talking about some end of the year and some new year predictions on the US dollar, as well if price is going to be a bearish year for 2019. As for the comments, I had a little technical difficulty with the restream, you guys, so I'm not going to be able to look at your comments as of today. But if you guys have any other comments or suggestions, please just go to the Discord and I will be checking that after this video. Okay, and I'll be up first thing on Monday, so this is just very temporary, so I apologize once again for that. And moving on with the video, you guys, so what happened for the end of the year of 2018? So as we can see, that price has moved to the downside for the US dollar, Japanese yen. We've had about a 3-week bearish momentum to the downside, breaking that 13,400 range, right? So we can see that it's been acquiring over about 370 pips, going a little low, or going a little more than that, as we can see that price has shown this very nice bearish momentum. So you're right, around 300 pips. So what we want to see now is that if price is going to continue to the downwards position we want to see, or downwards direction, we want to see a retracement. So possibly we'll see a retracement on the daily chart. If you want to break out the daily chart, it could be something that that I use to be able to see where price is going to be directed on a higher perspective, right? So price is going to jump to the upside, and what we want to see is price test this level previously where the break was. And if we get that confirmation and price decides not to break this area, then we will see a nice continuation of that downside momentum, you guys. So where do we want to see the US dollar in general be on for our go towards the 2019 for the first beginning, maybe the first quarter? So what we're going to see is a lot of fundamental data coming out, right? Especially with there's a lot of turmoil going into the United States, where a lot of things were priced in when Donald Trump was elected. Meaning that pricing in is that we try to leverage a lot of the supplements of the U.S. economy, right? We're basically trying to stimulate a lot of things that were needed to be grown for the economy to stay stable. So when we price in a lot of things, especially if we priced in GDP, we priced in CPI numbers, we price in a lot of very high factual things that are going to affect the economy. When it comes back to basically what the old saying is that when the chickens come back to roosting, right, they're going to have a structure, right, a stability that's going to be able to show that there is something value, right? But if there's no value behind it, then it's going to have a plummet, right? You're going to have something that will be like, okay, well, we've said all these things and we've had all these prices, but this is off just basically leverage. This is off just pricing in all of these values that we haven't been able to sustain for the last 2 years since Donald Trump was, or last year since Donald Trump was elected. So when we see these see this growth, then we know that price is going to have a downwards correction just due to how the economy works. So what we want to use is we can use the 10-year. So we can use the 10-year bonds, or we can use the index. We can use futures. We can use 10-year. It doesn't matter. What we want to see is, first we want to see price go into. So as we can see that the 10-year bond has now come up to highs, right? Now we see this level retest previous lows, and then we see market price starting to gather a lot of liquidity to the upside, right? Well, price is going to have an area where structure will first have to define. So let me get this down. So as we can see, that price is at these highs, right? We saw that swing low to the downside. We saw that retest of lows and then shoots up to the upside. Well then, yeah, we're going to see a nice bullish momentum because we are obviously pricing in a lot of things. But as you guys can see previously, this is a nice area of structure where price is going to have to break this area. So depending on where we stand for 2019 on a lot of fundamental aspects, but more so on how the leverage and how the price and value that we have been doing for the last year and a half, how that's going to take into effect coming into 2019, because everything has to come to the surface. Doesn't matter what it is. At the end of the day, everything comes to the surface. So if we have been pricing in a lot of things, then we're going to have to see that that digress in the market before we see another sustainable trend to the upside. It's just how the markets need to play out. Anything that is fully non-sustainable will automatically come back down, and as well as vice versa. Anything to the downside will obviously have to come back up. It's just the way the algorithm has to play out. So what we have to see is that because of these two statements, we have 10-year Treasury bonds, which is going to be, like I said, you guys, it defines if the dollar is going to be bullish or bearish. And you have to take in consideration that price is going to be propped up, especially in 2019 with a lot of data that's been coming out. A lot of these prices are going to be propped up for the first quarter. So I don't see a lot of huge market movement in the beginning of the first quarter data when data comes out first quarter. But I will say that when we see the second quarter and third quarter come out, we're going to see a huge rush to the downside, especially with prices going lower and lower. We're going to obviously see a lot of Bitcoin's going to go up. We're going to see just cryptos in general go up as a safe haven investment for a lot of investors that are holding a lot of capital for their clients and so forth. So we're going to see real estate prices go down. We're going to see home sales go down. We're going to see metropolitan income go down. We're going to see just a wide variety of big accounts and big fundamentals that we usually specify on are going to go to the downside for the first quarter of second quarter of 2019. So this is where we're going to see price, have an area. So this is what I mapped out earlier for the Euro USD, and the reason why I mapped this out is because price is going to have to, retest previous highs like we said earlier. It's not going to be able to just shoot all the way down because eventually it's going to have to come back up. Like I said, anything that goes down really fast or goes up really fast comes down really fast. So if it wants to actually show sustainability and show a big trend or show a trend at all, it's going to have to show these lower lows and lower highs, where price is going to have to come up, test this previous low, or test this low of this breakout area, which is 112,500, and then we're going to see a continuation to the downside, right? But if price decides to not continue to that downside and it maybe retrace and breaks high, because we have to take into consideration, this is not necessarily a market stop hunt, right? This is just price being consolidated, and then we have that drop. So if we do see that stop hunt happen, which means stop hunt is for, if you guys are new to this video, I go over stop hunts, which is basically liquidity being trapped in one area where price could come down, break this area, and come back, test 114 or 113, 750 or so forth, consolidate price, and then drop back down, creating that M formation, right? That M formation we love to talk about. That will be another consideration as well. So we're going to definitely be seeing downside momentum on the euro, the US dollar, especially during around February, March. But January, I want to definitely see price continue to the upside a little bit, maybe even test previous highs over in this area, trying to lock in a lot of those buying positions, lock in a lot of those traders for the upside, and then I want to see them break out of price where they will be caught and trapped in this area of liquidity between this 13,500 round and 4,500 round, and having a lot of buy orders being filled in this direction. So that's where I basically think that price is going to be going in 2019 with a lot of upside consolidation for the first part, and then we're going to see definitely by February, March, we're going to see downside momentum, and pressure is going to be built to break down to these lows, which was March of 2018, because the market loves to break and retest, and what we're going to see is probably the same thing where the market's going to break an area and then come back and retest that low. And then if we do see a nice break and retest, what I would like to see, if price does go to this low of March of 2000, and if we do see that low, that's about a 750 pip drop. Let me just make sure that I'm correct on that. Around around 600 pip drop. So if we see that nice, it's about a 600 pip drop, and this could happen between early February, right? Because I really think price in January, like I said, is going to be that retrace, consolidate, retrace, and then price is going to be trapped, and then we're going to see that move to the downside. So if we do see this maybe 2 or 1 month level of drop, then we'll definitely catch that bearish retreat or bearish continuation of that downside reversal. So where to next if price does decide to drop back? So if price does decide to drop back to this level of March of 2018, we're going to see price then continue to the downside if it wants to break this previous structure. So this is where a lot of stability is going to be for a market in general, and that's a huge area of support, because if you guys look back, this is where price broke out when Donald Trump was elected. This is where that first bounce of 2018 was. And then again, if we see price test this level again, which it will, right? Price lows working off lows. We'll see if price does touch this level. We also have this level to break as well, which is 108,500 to 108,250. Between that level too. If we see price break these two levels, then we will then see price continue. But until we see price come back and break this level and then break this level, I want to see price come back up one more time, maybe consolidate to trap and induce another buy stop order before we see price run down to lower levels, right? And this is if we see between July and August, right? This is going to be the 6-month turning point, which I like to call the 6-month cycle of doom. So what happens is after 6 months, usually the market will then reverse to another side of the market. So the market will do about 2 to 3 months of a continuation of one trend. So a continuation of one trend is the price will go into an area, and so for 1 or 2 months, let me map it down. So 1 or 2 months, price will come down, and then the 3rd month, price will come back up, retrace, and then the 4th month, price will then consolidate, and then the 5th month, price will come back and retest the previous lows of that 1st, 2nd, or 3rd month. And that's where we see a lot of price when it goes into these month standards. We'll have price continue, we'll have it drop, continue, drop, and then bring back price all the way to previous highs at that first high of the previous month. So it's a huge one that I like to look at, and I'm going to go over how these monthly structures work. I'm actually going to map it out for you guys because it's easier if I have it mapped out, and then I'll have it on the trading view so you guys can see it step by step, and I'll have that available on Monday for you. So let me just remove all the drawings first and then go back into what I was saying previously. So we're going to go over the monthly segments and how the charts work on the different type of reversal structures. That is, this is a huge one for swing traders that do look at the daily chart, but we're going to go back to previous analysis on what we were talking about earlier. So going forward, I want to see another thing. When price comes down into this area, which is definitely a huge structure, then I might see an area where support will be validated. So if you see price right here, and if price is validated and it comes down into this area, then we now can use this area as a support line to draw our bullish breakout, and then after we see that continuation, go to the downside. So that's where my analysis for the US dollar. We're going to see a nice drop after probably February. February is we're going to start to see that the break to the downside. February to around April, May. April, May is we're going to see that downside. May to around October, we might possibly see that reversal to the upside. And then October to December, we'll see that downside retracement again. So it'll be basically like last year's, where this was, let me find the beginning of 2018. So January 2018, right? Market comes down, makes that 3 month. Remember I talked to you guys, market will trend about 3 months, and then it'll continue that 6 month breakout to the back to the upside, and then we have market price come back into an area of previous lows of August. So that's where what I'm talking about is the market will work off those lows of December. So when January comes into fruition, they'll either work off the lows and consolidate, retest the psychological level, which is 12,500, drop back down, and then retest that high one more time to trap those buyers, and then move price down to test previous lows of earlier years. So 2016 would be a nice break to the downside, which is 102.50, and that's where we'll see a nice leverage trade to the downside. So we'll take this into consideration and we'll map it out, and price will then show value over time, especially when a lot of other data reports come out that will give us more segments. So we'll use a 10-year treasury bond as another example, right? So as you can see, we're testing highs again, right? You see that W formation, we're about 103. So if we see the 10-year treasury bond high, then we know the dollar is going to be a little higher. So we can see that's going to be a nice retracement to the upside, and then we're going to see a minor retracement and start to see the dollar bond, the 10-year bond, excuse me, come to the downside and break low, where price will then start to formulate to the downside. So because there's obviously 3 spikes to the upside trapping, right? This is obviously not the way that the Forex market works. Is totally different. This is obviously completely how the formation of the monetary policy and the monetary structure is, which is a little different than how Forex is, but it has huge relevance to it. It's all integrated into the same system. So with this being said, we're going to see that nice retracement to the downside. Price will then have that drop 1, 2, 3, and that nice drop, right? And then we'll see a break to the low, as well as we'll see a break to the low with most US pairs, especially the US CAD, because that one's been a hard one for us. If you guys have been looking at the signals for that one, price will then come up and drop back, and then have that nice retracement, because this is a high spike to the high, and we'll see that nice spike back down to the low, and then we'll probably see consolidation before you see price move back to lower lows on early 2019, and see where price will move from there. So as for the US or cryptos in general, we're going to see a nice upside momentum in the near future. We might see another test around this area before we see an upside momentum, so it could be more so of a micro anchor leg, or price could have another bounce to the upside, so then volatility will then spike up. So we'll take that into consideration with crypto, but it's still, as we can see, a still bearish trend. It hasn't broke the 50 moving average on the daily chart, so we still can see that price is still going to the downside. And if we do see price still continue to the downside, we're going to have to go short. But we do want to see a reversal, especially if the US dollar is going to have a nice bearish retrace for 2019, maybe 2020 possibly too. Then we're going to start to see a huge momentum where we'll see a nice upside momentum to the upside momentum for Bitcoin in general. So I'm moving forward with the euro dollar. The euro dollar is self-explanatory. It's what we talked about earlier. The market was going to have these 3 or 4 layers of market trap. So we can see that the price has moved 3 levels from the lows and the highs. So market price 1 here, see here, we see here. These are 3 levels of consolidation. We see price trapped in these 3 levels of consolidation, and then we're going to start to see an upside run to test this previous high at 17500, especially the breakout of 2000 January. If we see that nice breakout, and if we're obviously going to take in consideration a nice stop point if the market wants to trap those sellers one more time before they make that nice bullish momentum. So we're going to see a nice run in early January. So this happens especially every year, where December, especially if it ends in consolidation, we see a huge range, because what happens is the new year brings in new percentages the proprietary investment bankers can move, right? So it's a whole nother range. So each month there's a specific range that the market can move, and they can't really move that much lower or that much higher, because it brings the market in chaos, and then there's no structure. So what happens is that they move in, and that's why there is an average daily range, average daily week, and an average daily month. So they use these percentages. That's why historical data is so precise, and that's why you can make it predictable, because if there is a average or a limit, then that makes a pattern, right? So that pattern is what we stabilize to understand how the markets are working, like a rhythm, like an algorithm, right? So what happens is it's coming into a new month. So in January, price is going to have a whole nother range that they can value. So they can go up another 600 or 500 pips for that month. So they can use it in any way possible, right? So it's not always going to be where like the daily range of the euro dollar is going to be every day like that. You have to also integrate that into what the system of what price looks like, right? So if we see a nice consolidation at a low, especially it ends in December, we're going to probably see a nice run to the upside in January, where then price is going to try to retest and break a lot of these levels of consolidation, where a lot of these sellers have been selling their positions, right? Their stop losses. So what they were looking for is consolidating price for about, as you guys can see, they consolidated price from August to December, right? And even earlier than that, you could say May, they were consolidating price. So they're basically consolidating price for more than half of the year. So what happens is, after they consolidate price for this long, they have to make price move into a certain direction. So then this gives them time so they can take back all of this liquidity from the downside and skyrocket price higher and higher to basically counter trend or attack all of these stop losses fast and easy, right? Basically take back in about 2 months or even earlier than that. That's why we mapped out that daily chart, right? When we talked about the Fibonacci, and I talked about how price is going to move back and make an information at that 50 moving average. So this is what I was saying with, earlier with that price, is that so price is going to come back. We drew that Fibonacci line earlier, and I talked to you guys yesterday about Fibonacci and how I use the tools of Fibonacci. And then we saw that it tests this, this 23.6, which is this area right here. I'm going to just erase this stuff so it's easier accessible for you guys. Let's remove all drawings. Let's start from the beginning. It's easier that way. So prices go from here to here. Make this low. Oops. Perfect. Test this 23.6% moving average, and then price will then drop, consolidate, test the highs, test the lows, consolidate, retest the highs, right? This area, and then come back and test those lows. And that's why we made that information at the 61.8, or you could say the 50% moving average. So this is why we put that second level, or that second leg, at the Euro USD, because that's where we see, if we looked at price differently, right, from the 4-hour chart, we can see that price has been consolidating since the daily chart. Price has been consolidating since May. So we know that price is going to have to drop somewhere and return to another level, and all this liquidity has to come back to the upside, and then price will then drop back and move to the opposite side of the board. So that's why we're going long in 2019 with the euro dollar, as well. This is the reason why, because the US dollar is going to be going a lot, it's going to be shorting. So that's another thing that we're going to look at. So price with Great Britain pound, once again, we saw that this price came back up, made this swing high. We got stopped out of our trade on the short position, which is all right. We already had a nice pip, a nice execution earlier that week. So this is just to retest those lows to see if market price was going to reverse. It decided not to. So what we did was that we went long earlier this morning, test those lows, and then we got the reversal on the upside for about 25 pips is the one that we tested. So, but now that we see that price again is consolidating at an area, you see price consolidating area, right? This is about 13 days of consolidation. Price is gonna have to move somewhere. So will we see in 2019 a retest of the low, or we're gonna see a breakout to the high automatically? That is something that we're gonna be looking forward in the near future with that price. So price is gonna make that nice angular support, then comes back, probably stopping out these traders, and then moving up to the upside, catching more pips so they can actually move price higher, right? So this is a possibility of where we're going to see price test these levels, and most importantly these levels as of November highs, because price is definitely going to test those levels. It's just a matter of time. So that's our analysis for today, mostly going over the US dollar, where it's going to be in 2019. Where is price going to be for the majority of the year as well? We're going to see those retests. We're going to see those drawbacks. What are we going to see in the US dollar? What is the fundamental data that's going to be coming out? And yeah, so I know this is going to be a short video, you guys, just because the market is about to close today. And there's really a lot of there's not a lot of fundamental analysis that came out. It's been pretty bland on the market side. So the volatility has been a little low. We hit some nice profits this week with the US dollar and the Japanese yen. And then obviously we had that retracement to the downside. So in 2019, we do want to see that reversal correction, just because market price did make that W formation right here. That's perfect. So we will see a retest of that level. So if we did get, we got stopped out. We didn't get stopped out on this trade, but we did exit earlier because we saw that price did retrace to the lows. So there wasn't any need for us to keep in that trade if it was a losing trade. So what we did was that we exited that trade. We'll wait for next week's positions, and then obviously restructure from there. So hopefully that this helped you guys with today's price action and analysis, and where price is going to be going. And if you guys have any questions, please leave in the Discord group. I'll be there afterwards here answering any questions. As I said before, there's something that went wrong with the restream, but I'll have that up first thing on Monday. And yeah, so exciting stuff, you guys. I'm super happy for you guys to be here. Once again, this is Brenton with Traders Profit Club. If you guys have any comments or any concerns, please put in the comments on Discord or leave on YouTube. Make sure to put that subscribe button and that like, and I will see you guys in the Discord. All right, guys, have a great weekend. Stay safe and stay profitable.